Good morning, everyone. I'm Henry Belani. What's whirring around in my head is trade finance risky? And ultimately, it's up to the individual banks to decide whether that's the case or not, right? You have to get the risk-reward ratio, and it's deciding whether it's a good business for your organization. What struck me is that as I travel around the world, I have the pleasure of actually meeting with banks in many, many different regions. I was recently out in Asia meeting with several banks in the Far Eastern region. And one of the things that they came up with was the issue around the non-banks. And Jeff is absolutely right. He's spot on in terms of being able, identifying the risk inherent with non-banks starting to get into the whole trade finance world as well. Because ultimately, I as an exporter or an importer, I need to finance my trade, bottom line. The question then becomes, can I do it through a bank? I prefer to do it through a bank because of the reputation, reliability, and credibility, and so on and so forth. But my bank is telling me that this is inherently potentially too risky. So what do? What's my alternative? I go to a non-bank of some sort. And the issue then becomes their standards are pretty, might be lax, might be different, and their objectives might be different, and therefore you have inherently the increase in risk as opposed to reduction in risk. So it's a bit of a dynamic ebb and flow, and a lot of our clients in Asia are actually telling us that these are some of the challenges that they face. And so one of the things that we have seen as we work through the challenges that we're facing here is the inherent issue around trade-based money laundering. I think you're seeing a lot of those types of challenges. And what we saw in particular was the issue around dual-use goods. Now, the UK FCA report, as Jeff had mentioned a little bit earlier, was certainly a challenge, right, in terms of identifying some of the risk areas that banks face around trade. One of the particular areas was dual-use goods, and I'll be talking about that a little bit. Now, let's start with this. You talk about are trades risky. Let's look at this chart here. Now, these are actual live transactions, all real transactions, all sourced. So you've got razors, cut emeralds, cordless telephones. Let's just start with that. Now you can see that when you look at razors, cut emeralds, cordless telephones, these are exports that are coming from Colombia, Panama, and France, and coming into the United States. And so these are some of the average prices that were out there. For example, razors for Colombia, $38.41 each. Emeralds, $974.58. Cordless telephones, I thought that was interesting, $4,000, $2,032.50 each. I don't care what the exchange rate, that's expensive. And then when you start looking at some of the other products as well, nickel alloy wire, that's a favorite, by the way, when you look at some of the potential money laundering transactions going on. Exporting from the United States to Venezuela at $221 a kilogram. Herringbone tire from US to France at $796. Machine guns, United States to France at $364.08. Enriched 235 uranium from United States to Spain at $15.50 a kilogram. And that should start to kind of raise some warning bells here in terms of the prices, right? What are some of the actual prices when you look at the world average prices? When you look at razors, the actual invoice showed $34.81. The world average price is really 0.09 cents each. It's an issue, right? I mean, you can see right there, there's some shenanigans going on in terms of the pricing itself. What could it potentially be, right? I would suggest it might be some kind of money laundering going on here, right? In this case, there is, overpricing going on. There may be transfers value from from United States to Colombia, could have been some previous transaction. And you can see that the price differentials are all pretty significant. My guess, again, these are not something I can definitely say, but just the price disparity starts to raise some suspicion around the actual purpose or the intent of that particular transaction. When you look at some of the others, for example, when you look at nickel alloy wire, the average price is $221, but the world average price is $12.26. So in this case, this was under-invoiced. So you have instances of over-invoicing and under-invoicing. Really, at the end of the day, it's about the transfer of value between one country and another country for some inherently underlying transactions. These are real. This is off of some research that was done some time ago, but I think it does drive home the point that us as banks, us as financial institutions, need to be kind of aware of not only necessarily the actual documents that we need to be looking at, but also the value of the documents. I believe most banks are actually, it's something intuitive, it's something second nature in their organizations in terms of being able to identify that. But I just wanted to highlight these real examples that these things actually do happen out there. And as I speak with banks as well, they come back and tell us that these are some of the challenges and issues that they have to deal with. So that's just kind of a quick example there.